Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week's screen deals with stocks to short, or at least not to buy. And here to explain it all to us is head of our Research Wizard Division, Kevin Matras. In fact, I will give you the full title to the screen. It's called Decreasing Earnings Forecast 2 Years Out, and then stocks to short, or at least not to buy.
In parentheses.
Right, in parentheses. I just couldn't do that all off the top that way. But I guess the whole bottom line here is the market keeps going down.
Right.
But it won't keep going down forever.
Right.
Sounds like the beginning lyrics of a great song. But you do have a screen for us to help identify stocks, best stocks to short this week.
Well, first off, with the market in a downtrend, I think one of the best ways to play the market and make money in the market has been to be a short seller. And I think that really still is the case. What I have been doing lately, though, in an effort to find good candidates to short, is I'm trying to find companies with decreasing earnings. And specifically, I'm looking for companies whose projected earnings this year are expected to be lower than last year, and I want the earnings for next year to be projected lower than this year as well. Now, it seems like a simple enough concept, but you'd be surprised at how many companies are forecast lower this year, but then forecast higher next year. Now, granted, being lower or forecasting to be higher, I should say, and actually being higher are two totally different things. But I think finding those companies whose recoveries are pushed out into the more distant future, I think those are the companies that should be last on your list to buy, and the companies that should be on the short list, no pun intended, that you would want to get short on the way down.
Is it me, or was it not that long ago that this practice of short selling the market was kind of frowned upon, was kind of looked at as cheating at making money in the market? Now it's like become more in vogue lately.
Yeah, I mean, I never did understand why people had said that short selling was un-American or somehow bad. I mean, it's a free market, and if you believe that a stock's going to go higher, buy it. If you believe that the stock is going to go lower, then sell it. There's nothing wrong with being able to try to make money as the market goes down. I mean, there's a way to make money in any direction, and that is what we're trying to do. There was a lot of brouhaha earlier this year about naked short selling.
Yes.
That literally is against the rules. You have to have your broker find that stock in order to sell it first, and then you have to buy it back later. So you can't just sell something without physically, owning it or locking it down first.
Right.
But there is a way, and it's completely legitimate to be able to short sell, and it's critical to the market for price discovery. But anyways.
Yeah, let's get back on track here. That is a good point that you brought up, though. But what is it about this concept in particular that you like so much?
Well, one of the reasons why I like this concept is because it seems as if analysts will oftentimes have an overly optimistic view of the future. I think it's just part of human nature. I like to call this the Chicago Cubs effect. Now, I'm a Chicago Cubs fan, so I can say this.
Wait till next year?
Yeah, I mean, that's what it is. Every time the Cubs blow it, right, all the fans say, wait till next year. But what if, getting to stocks, what if the analysts, instead of saying whale next year, get even more sour on a stock? Oftentimes an analyst will come out and say, I don't think the company looks that good this year, but wait till next year, things will be better. What if an analyst says, I don't think the stock looks that good this year, and you know something? I think it actually looks worse next year. Those are the companies that you're going to want to ride down, and I think those are the companies that are probably going to be the last ones to show any recovery when the market finally does turn around. So I think those are the best short-selling candidates.
Makes sense.
Yeah.
So, in particular, how do you go about finding these companies?
Well, in this week's screen, here's what we're doing. I'm looking for companies whose projected EPS, this year's projected EPS, is less than last year's actual EPS. That means I want F1 to be less than F0. Now, if F0 hasn't yet been reported, you can use the estimated EPS. But either way, this year is supposed to be less than last year. The next item is I want next year's projected EPS to be less than this year's projected EPS, and that would be F2 is less than F1. Next, I want the Zacks rank to be greater than or equal to 4. So again, we're looking at sells and strong sells by Zacks. Then, for good measure, I want the percent change in F1 earnings estimates over the last 12 weeks to be less than 0, meaning I want to see negative earnings estimate revisions. Same thing with F2. I want to see the estimates going down. And I think this paints a very dour picture for the stocks.
Okay. So do you have an example of a short stock?
Of course I do. One of the companies that came through this week's screen is a company called Cooper Industries. Ticker is CBE, and they're a diversified manufacturer, marketer, and seller of electrical products, tools, and hardware. They came into the week with a Zacks rank of a 4, which is a sell. They have negative EPS growth rate, a forecasted negative EPS growth rate this year of 30.4%, and they're expected to lose another 2.8% next year. If you look at their earnings estimate revisions as well, for F1 and F2, the revisions have been aggressively revised lower. F1 is already down 26.69% over the last 12 weeks, and F2 is down 30.87%. So again, the prospects for the company seem to be getting worse and worse. And if you look at the stock right up here, you can see the chart is really starting to break down. I wouldn't be surprised to see Cooper Industries make new lows very, very soon.
And obviously you don't own it.
I don't have this stock. No, I don't.
Okay.
Have not shorted it.
Have to check. Now, Kevin has other stocks in the text version of his piece that have come through the screen that he runs down for you as well. You want to get over to Zacks.com and check that out on our homepage. Also, Kevin achieves all of these screens with the Research Wizard Stock Screener. That's a very powerful software program that you'll want to know more about too. In order to find out more about it, go to Zacks.com/Research Wizard. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.